Hey everyone, welcome to Youth Bombs. I'm Craig,
I am Coleman.
And I'm Holden.
and we're the voice of young conservatives in Alachua County. Egg prices and credit card interest rates. A lot of talk about that. Holden, where do we stand with the eggs, my friend?
So there was a recent bird flu outbreak where many millions of birds died. And
Yeah, I think they died of natural causes, and they were just straight up executed, right?
I think it was some sort of flu that was going around, if I'm not
It was
mistaken.
an avian flu, but I believe the Biden administration ordered about 170 million plus chickens to be killed.
I
To stop the
read it
spread,
was like
right?
30 million. So whatever the case,
Yeah.
whatever the case is, the population of birds was declining significantly, and so this makes it so that there's less production, and of course, less supply also equal higher price. So. So basically, the price of eggs goes way up because there's a much smaller supply, and eggs are a classic example of really inelastic good. So price goes up for an inelastic good, revenues go way up, and profits go way up for companies. And that tells entrepreneurs that we need to produce more eggs because it's really profitable to do so. So the price going up is saying, we really need a lot more production because consumers still want it, even though the supply is low. So high profits are signaling to entrepreneurs, and high prices and revenues are saying we really need to produce more of this. So that tells them they could work overtime, make a lot of money or whatever. So more eggs are coming onto the market. And the price for a few weeks now has steadily been going down and down and down because the price signal is telling entrepreneurs to make a bunch of supply. Yeah. So, so like a lot of people were saying, well, we need price controls because these greedy corporations are gouging their customers. But it's almost the opposite, because imagine we didn't have those corporations who were selling those eggs right now. We'd have an even smaller supply, and it would be a disaster because of how much of eggs are, a staple to so many recipes and whatever. So it'd be a disaster. So yeah, those high profits are an amazing thing,
Right, and with the price controls, that just ensures that the people who need the goods most don't get them. It's always a bad idea. It sounds like a good idea, especially when there's an earthquake or something, but that's just economic illiteracy, and the people advocating for that need to look at history and how there have been so many shortages when price controls have been implemented.
Right. So let's explain how that works, just so the audience knows. So let's say you have, supply and demand graph. You have an equilibrium price and quantity. Well, the problem is let's say you're a politician and you don't like that equilibrium. It's like, it's too damn high or something like that.
Yeah.
So what you do is let's lower it down below the market price in quantity, lower the price below the market price. So now, I think what happens then is the market supply is less than the market demand in quantity-wise. Therefore, you get a shortage. That's how this works in basic economic terms.
Right.
Yeah.
Exactly. You got it. So bottom line is, with the eggs, we're down about 40% from the high, which is fantastic. And turning to credit card interest rates, something there is that Representative Anna Paulina Luna and AOC are teaming up on a bill to cap credit card interest rates at 10%. I say this is a bad idea because it's going to limit access to credit, and the companies will just increase fees. Holden, you're the economic man. What say you?
And yeah, I think you're right. There's going to be less credit cards are going to be issued. There's a lot of fraud in the industry, so they need to recoup a lot of costs through higher interest rates. But I mean, obviously, it's a terrible idea. Unless you have almost immaculate credit, you're not going to get a credit card because it's just not going to be profitable enough to issue them to you. Or they're going to find other things. They're going to charge fees. They're going to figure some other way to issue the credit card while still maintaining profitability, and it's going to be less efficient, and it's actually going to end up costing more for people who want credit cards. So yeah, it's a disaster. I mean, price controls never have worked. For thousands of years, they've tried price controls, and they've never have worked. But unfortunately, Senator Loomis, I think, and AOC just don't get that point.
So,
and yeah.
I guess let's break this down too. So the way I like to think of interest rates is basically the cost of borrowing, right? And then I think here we could also apply the same analogy of eggs, for instance. Here, like we're saying, like the market cost of borrowing, like is too high according to the politicians. So we're gonna try to bring down the cost of borrowing below market value. So therefore, we end up with the same situation where I think. Tell me if I'm wrong, but wouldn't the supply of credit cards also then be less than the demand of credit cards?
Yeah.
After that? Okay.
Yeah, there will be a lot of people who want credit cards but can't get credit cards, even though they would be willing to pay the market price if it was there. But because they can't pay that, it doesn't incentivize enough producers to come into the market and supply that credit card to them at a higher price. So
It's just such an arbitrary number, right? The politicians are just picking a number
Yeah.
out of the hat and saying 10% is a good rate when the market is saying 24% or so. They're not running the businesses. They don't know the financials of these credit card lenders, so they don't know how they operate and what they need. The 10% is just too arbitrary and too silly. But Coleman, individuals who have trouble paying off their credit card debt, they're going to say, well, we need this because it's so challenging to pay our debt.
Yeah.
How do we help people in debt who are perhaps at the poverty line?
Ooh, good question. Well, I can talk about how to prevent someone from getting into debt, and then how to get someone out of debt is a bit more difficult. Like that's probably, unfortunately, you probably need like a financial advisor, or like you're gonna have to rely. If you're really down bad, you might need like SNAP benefits or welfare or something like that. But anyway, but I can talk a little bit more about how to not get into debt. I think, and this is probably the problem with credit cards in general, is that like it makes the price of things, I guess, it makes transactions less painful, right? Do you know what I mean by this? So,
Right, like you don't have to have cash carrying everywhere with you.
So, like for the audience, let's explain this a bit more. So, when you have physical cash in your wallet and you've seen it go away when you give it to the cashier, you feel the direct pain of loss. But here, when you have a credit card, you're not looking at your portfolio or balance all the time, so it just feels quick and easy a lot of the times with the credit cards. So if you're not paying attention, if you go beyond your given credit value and then you're incurring debt, then you run into a problem. So it's just a matter of how salient, like I guess, or how aware you are of your balance.
Right, financial literacy is key. So, Holden, do you believe, as a whole, the credit card industry is overregulated, and what are some things we can do to fix it?
I also want to hear about this corruption thing. That'd be fun.
yeah, well, let's address the first point, and then I'll get to the credit card companies and regulation with that. I think people's time preferences are too high, and that's why people spend more than their income. And very often, and unfortunately, that's because interest rates are lower than they otherwise would be in a free market. So because a lot of fiduciary media, it would be called, which is money substitutes not backed by savings, is issued, it makes interest rates lower. So the supply of loanable funds is higher than it actually is. There's an illusion that there's a higher supply of loanable funds, and on the supply and demand curve, that a higher quantity of loanable funds, which is savings, makes the interest rate lower. So this fiduciary media that's issued makes the interest rate lower. So the price to borrow money is lower than it otherwise would be. So people are more willing to spend and borrow money because of the artificially low interest rates. That is, a lot of the problems in the banking system that, anyway, so yeah, it's a pretty complex problem. I don't have enough time to get into, but essentially interest rates are lower than they otherwise would be. And so people are more willing to spend a bunch of money on just random things because they have a higher time preference. They spend more than their income. And time preference would just be the discount against the discount against future goods, the discount of future goods against present goods. So how much do you discount the future? So that would be the definition of time preference. But and then on Craig's point, what was it again?
How do we deregulate the credit card industry fast?
So what we need to do is, there's so many different regulatory bodies for the market for capital and for credit
Yeah,
card
wouldn't
companies.
say like the FDIC, for instance.
Yeah, the
Or
FDIC.
the IRS even.
Yeah, I mean the FDIC would they're on deposits, of course, and for lending licenses they help with. So that's a huge issue. I mean it's extremely regulated, and there's a very high barrier to entry to get into it. So low cost competition is very hard to come by in the credit card industry, and it's just insane. Like people are borrowing at 24% interest. Like if you want a loan at 20% interest, just call me. I'll lend you the money. Like that's just an insane interest rate. Like I like that's so profitable, to do that. But of course, in a free market, that's telling entrepreneurs to come in and supply that. But unfortunately, we don't get that same result. But yeah.
Yeah, and I think another thing like you'll hear, at least from various life coaches I have, there has to be some nuance here in the sense of like, well, isn't it good to build credit? Like, isn't it
Sure.
good to like incur some debt so that way like you show good behavior and paying it back, then that's basically your report card telling banks what have you that, oh, we can lend this person more money and they're reliable for the future. So like, is there a middle ground here? Right?
Yeah, I mean, it's certainly a debatable issue because you'll have different financial experts telling you different things. What I did, not financial advice, is when I turned 18, I got a credit card and only spent a little bit of money on it each month for necessary purchases. That way I could build up a very high credit score. So that was my strategy. But some people say forego the credit card altogether. Others say buy way is the way to go. Depends on who you ask.
I mean, I'm not a personal finance expert, but I wouldn't be borrowing at 24% interest.
Yeah, definitely check the interest rate.
Yeah, and I mean,
financial
I use credit cards all the time, but I don't pay any interest on them.
Right.
Like that's like it's so stupid to pay interest on your credit card. It's hard to think of something more destructive.
Absolutely. Gotta just pay the bill on time and boom, no interest.
Yeah, no interest. If you pay it on time, you'll still get rewards. It's like free money. So if you're responsible enough to do that, but if not, then just don't do it.
Absolutely. Well, that being said, thanks everyone so much for watching. We really appreciate it. We upload 3 times a week. Don't forget to like, comment, and subscribe. And feel free to reach out to us at youthbombs@alatrarepublicans.com. Thanks so much, everyone.